Boy, things have changed.
know.
This is,
Normally, meetings used to start late because the trains were late.
And I'm sorry, I feel terrible because I'd like to meet everybody, but I don't think you want me in that room.
No.
Not at 100 and something fever, no thank you.
We're live? Okay, we're live. So it is 6:08 and we will call the meeting, the audit committee meeting of November 10th to order. First up, internal audit. Don, I'll hand it over to you.
Okay, yeah, my name is Don Hoffman. I'm a partner with Cullen and Danowski. We have been the internal auditor for Hopog for a number of years now. The internal audit function requires that we do two types of engagements each year. One is a annual risk assessment, and one is detailed testing of some area of the operations. So we last met last December, and at that point it was decided that we would look at the financial operations of special ed, because there was a new director, and we also looked at just the accounting for assets and the tracking of assets. We didn't visually inspect too many assets, right? And that's we did that work in the spring. The woman who did the work for us is a senior, with about 10 years experience, and she's been on the Hopog account for I think 4 or 5 years now. So we did that work in the spring. The second engagement that's required under the internal audit regulations is an annual risk assessment, and we did that work over the summer, and I'll present both reports tonight. My understanding is that everybody's had an opportunity to review the reports before tonight, so I'm going to just touch on some of the highlights. Obviously, I'll answer any questions you have. Generally, people have questions about, either the findings or the recommendations. I'll be glad to answer any questions you might have. So the first report that I'm going to start with is the one titled Independent Accountant's Report on Applying Agreed Upon Procedures. The format of the report is similar to prior years. There's some kind of boilerplate information for the first couple of pages. Then starting on page 3, we provide some detailed background on the special education finances and the grant administration. And we put in a detailed schedule from the appropriation status report of the budget versus actuals, right? And I found this to be pretty interesting because the budget was, for special ed was very accurate. The total budget was, almost $15 million after adjustments, and the budget variance was only $500,000. That's an area that districts wisely budget conservatively for, because it's unknown during the course of the year if new students will move in, and a couple of new special ed students could have a pretty significant financial impact. So the fact that your budget was that accurate is a good thing, right? It shows good controls. Part of the budget controls that we look for is to make sure that for tuition and BOCES in particular, that there are detailed student-by-student budgets prepared as part of the budget process. There was some number of contingent positions within the budget, but as I said, overall, the budget was accurate. So we provided that information on page 3. On page 4, we provided some information about the two major special ed grants, the 611 and the 619 grant. And again, the way the accounting for grants work, they're not in your general fund. Grants are in the F fund, the federal fund, and the accounting for those is that they break even each year. So the important control from a business office perspective is to make sure that you don't overspend the budget that's been approved by New York State for spending under those grants. So we confirmed that that did not take place. We have a recommendation in this report is to use the budget functionality of your financial accounting system to help control the budgets by inputting the budgets right off of the grants and then using that to control the budgets each year, okay? But this, page 4, you know, from a budget perspective, all looks good to me. No particular concerns. Anybody have any questions about any of the background information?
So real quick, Don, you mentioned that it was accurate because we budgeted 14.6 and ended up spending 14.1.
Yeah.
There's a whole column worth of adjustments. I know later on, there's a note that says there was adjustments related to, because of COVID-19. In this case, I'm seeing those adjustments added expenses to the original budget and brought it from 14.6 to 14.9 on page 4.
Yeah,
So how do we, I just don't, you know, other than saying COVID related, is there any more light you can shed on what these adjustments are?
yeah, some of them are transfers between salary codes, because when the budget's done, you don't know exactly what person's gonna be in what building. So some of that detail is in there. And then other pieces of it, particularly when you get down to the bottom half of this, the 29,000.
Well, ultimately, it's an increase of $300 and something thousand, and that's what I'm trying to just, you know, without going, you know, is there a general explanation for these adjustments increasing the budget from the 14.6 to 14.9?
Yeah, most of it is salary related, and it had to do with staffing issues from the original budget.
So how does that get approved, right? If we vote on and approve a certain budget, what happens after that allows us to add to that budget, I guess is part of the question.
These adjustments are made through budget transfers, which the board has a
Okay.
policy of which budget transfers they see.
Gotcha.
So
So this came out of somewhere else then to.
Exactly.
Gotcha. Okay, I'm good with that.
Yep. Okay. Then starting on page 5, we list the procedures that we performed. Page 6, we list the findings. Again, these are pretty detailed findings. Some positive, some negative, but this is information that we put into the report. And then on page 7 are recommendations. So we had 4 recommendations. One is just to do a review of policies. Some of the policies go back a number of years, so it's worth reviewing to make sure that they're up to date.
Now, Don, when you said the positives are always great, what are the negatives of it? That's something we should work on as a district, sir?
Well, that's what the recommendations are,
Okay.
are addressing a couple of minor negatives.
Okay,
So there were a couple of invoices that weren't paid timely.
okay,
It's worth paying attention to those.
gotcha.
Number 3 is to use the budget system that you have for the F codes to get the budgets for each of the approved grants into the accounting system,
Okay,
because that helps make sure that you don't overexpend the budget.
okay,
Okay? And the product has the capability, because sometimes grant expenditures cross school years, the software has the ability to account for that.
understood.
Okay, so it's very powerful that way. Final expenditure report for federal grants. And number 4, recommendation 4, is to just make sure that you reconcile the final cost reports to the general ledger codes,
Okay,
so there's no discrepancies. Those final cost reports go to New York State, and then they're funded. You know, that's what you're getting your funding from. Okay, so it's important that tie into your financial records. Okay, so overall, the reason we looked at special ed was because there was a change in administration in special ed over the past couple of years. And all the conversations we had, the supporting documentation to the budget, the general understanding of how things should work, were all positive.
that's great.
Okay, which was a good thing. Any questions from the Google participants? No? Okay,
Nope, I'm fine.
good, okay. The second part of the report was to look at asset accounting. And the idea of looking at this was, you know, not to try and find items, but to try and make sure that the systems that were in place to accumulate the data, match it up to the general ledger purchases, and then ultimately what's reflected in the audited financial statements are accurate. Now, most of purchases under governmental accounting, when you buy equipment, as opposed to in a business, when you buy equipment, you don't capitalize it in the governmental funds. The general fund simply has an expenditure, okay? The fact that there's an asset goes on the government-wide financial statements, which, from my perspective, are almost meaningless, okay? They exist, the governmental accounting standard boards wants it to be done. I can understand why you'd wanna have a register of assets, but the accounting that goes into the government-wide financial statements, and Mary Ann Van Dyne's gonna report, tonight on the audit financials. Those government-wide financial statements, have a very, very limited use for helping people manage the operations of the budget. So with that said, the asset accounting, went well. The recommendations, again, review and update the policies, because they've been out there for a number of years. And then recommendation 6 has to do with how obsolete equipment is recorded. So when you have equipment in your register, the board should authorize the fact that it's obsolete and remove it. That should not be done without board approval. Those records should be reconciled from the board approval to what ends up in the asset listing. And the asset listing should have a note, a status code, obsolete, discarded, approved, whatever the board approval date is, so it's all 100% trackable. It's not complicated, you have the records, it's simply a matter of updating those permanent files. But in terms of the procedures to make sure that all equipment is ending up in an asset register, including iPads and Google Chrome devices, that kind of stuff, all of that's happening. We tested some invoices, we searched to make sure if you bought 500 iPads, that we could find the 500 iPads in the register. So that's important that's there, okay?
Now, you do other schools as well, sir.
Yeah.
So like, I know that Whippoorwill is used for the storage and stuff in the basement here. Do we have more than other schools similar in size to us, or, as far as extra inventory, as far as desks and all that other stuff, or?
That kind of stuff gets accumulated based on, 20 years of history and student counts and everything else, right?
Right.
There are quite a few districts in Suffolk County that the student counts are, dropping substantially.
That's what I'm asking, sure.
Right.
Yeah.
And I know the numbers pretty good. Sachem, for example, graduates 1,300 kids a year,
Right.
or they did.
Okay.
They're putting 800 in the kindergarten.
Wow.
Okay.
4,500
Smithtown, right next door, graduates 900
Right.
from the 2 high schools. They're putting 500 and change.
Hmm.
3 Village, where I live, 600 graduate historically. They're putting 320 in the kindergarten.
Right.
So
Right.
they've got extra furniture.
Sure. That's what I was wondering, because
Yeah.
we are seem to be stocked up a lot on it.
Yeah,
Okay.
and hot dog, my understanding is you've been dropping somewhat in
No, we
head
have.
count,
Yeah.
but I don't know that to that proportion,
Okay.
right? And they've been at it for 5-6 years now. Those other districts, that's been a pretty steady trend over the last 5-6 years,
Gotcha.
okay?
Thank you.
Smithtown's closed schools.
Yes.
Sachem has closed 2 middle schools, and an elementary. 3 Village has not closed any schools yet. So everybody handles it a little bit differently.
Gotcha.
But, that's a key part of the, role of the board is to,
Sure.
have some forecast, right?
Perfect.
So any questions about the, agreed upon procedure report?
Now, one more question though,
Yeah.
based on your experience now.
Yeah.
I know it says in the actual financial statements that we capitalize everything $1,000 or more.
Yeah.
Is that the appropriate number to use for a district of our size, or is that creating more work than it's worth, or what's your opinion?
Well, it's probably not creating more work because you might want to track those items anyway,
Okay.
right? So right now you're tracking iPads and things like that.
Mhm.
They're not $1,000 a piece, but you're tracking it anyway, right? So there's not that much activity. In terms of the value for capitalization, that only impacts the government-wide financial statements, which I don't think are that significant. The one guideline that you get for the federal funds for grants, their capitalization number is $5,000.
Okay.
Okay, so if you put something through in a grant that's over $5,000, it goes into their equipment code, gets evaluated a little bit differently than a supply code. A lot of districts use the $5,000 capitalization number because it ties to the federal grant number.
Okay.
But it's just a number, it doesn't create that much extra
All
work.
right.
You use an accounting software that accumulates, it does the depreciation calculations automatically, so it's not that big of a deal. Okay.
Are these the right dates with June 30th, 2020 on this report?
Yes,
That is, okay, so this is a June 2020 report.
no, that's gonna be 2021 as
That is
well.
also a contact.
Yep. Okay, so the other report then to look at tonight is the risk assessment report. The risk assessment report, if you look at page 3, it says what reports we're following up on open recommendations for. So when we create a recommendation in our internal audit report, the district has to prepare a corrective action plan, and then we follow up in the risk assessment whether or not they've implemented. We also interview people both inside and outside the business office to talk about changes in procedures or changes in staffing, so we get an idea about the relative risks in different areas of the operations, right? So most of the body of this report, starting on page 6, lists the status of prior recommendations. Now, there were no new recommendations that came out of the risk assessment. That's not unusual. It's a little difficult to find something, brand new through interview process. The next several numbered items, which there are 5 of, are open recommendations that were not yet addressed adequately, okay? The most, in my mind, the salary rollover checklist one, should be prepared. You have an experienced payroll manager, so she doesn't think she needs it because she knows what she does every year. And that'll work fine till she forgets a step because she doesn't have a checklist, okay? And the reason you do a checklist is so you don't forget something, but, so I still recommend that get done.
As you've been recommending for the past 6 years.
3-4 years. Is it 6 years?
2015.
Yeah, then it's been 6 years.
Yeah.
Items,
That also matters too, sir. Imagine, God forbid, she or he called out sick.
no question,
The next person steps in, there's no checklist.
no question. Yes, it should be put together.
Okay.
The next 3 items about some of the fuel information. The most significance there is item 3, reconcile the bus company's invoice. So the way the fuel works with your bus company is they do a calculation. Their price to you does not include the price of fuel. You have to provide the fuel.
It's a dry
for that.
contract.
It's a dry contract,
Right.
exactly.
Yeah.
So they send a letter each year that says, you have to buy us X amount of gallons of gas this year, and it's to the gallon, 60,891. Nobody, as far as I can tell in Hoppo, has ever checked the calculation, okay, to make sure that it's right.
Maybe
So-
we're doing well, we're actually doing better.
But that would be fine, then you can keep quiet,
Yeah.
okay? But my recommendation's been to check the calculation. They calculate it to the dollar, just get their spreadsheet, see how many gallons they calculate, test a few of the routes to make sure the mileage is appropriate, and then you'll know that they're doing it the right way. Now, it's a risky area because their incentive is to exaggerate those number of gallons, and it's important somebody monitor that. So that's what that recommendation is. A couple of the recommendations was related to fuel were implemented, so I was very happy about that. Creating logs of usage and keeping track of the inventory, those were implemented. So I was pleased to see that. That was new, and that's on page 9. Again, for the first time in some number of years, there's been good reconciliation and review of the fuel activities at those tanks. So that's good. I think there's a couple of things here to address this year, and that all of that transportation-related stuff will be closed out. Okay, so again, did anybody have any specific questions about any of these recommendations or comments or findings?
No, but you are on page 4, is that where you're recommending the proposed testing?
Well, yeah, so let's go back to that now. So on page 4 and 5 is a chart that we've maintained over the years of areas and the last time that they've been reviewed in detail and what our control risks are, which is a little bit subjective, But, in here, the question is what area to look at, next spring, right? And Bridget and I have talked about it. My recommendation is to look at the benefits area, because there's been staffing changes in the business office on the people who administer that. And it's a relatively complex area. It's an area that over the years in other districts, we've seen errors. There are laws that have to be followed. There's good accounting practices that should be followed. In our risk assessment, we've talked generalities about what those procedures should be, but that's the area I would recommend that would really come in and do detailed testing and detailed work on. It's a lot of money, health insurance, other programs to make sure that the district is paying for benefits that are in the collective bargaining agreements, and that they're charging the employees or retirees the appropriate share of the costs. Okay. There's other benefits, ERS, TRS, which are generally more routine. Our findings there have not been as substantial, but most of it has to do with health insurance.
And you're suggesting that over items such as, at the very top of page 4, governance and planning, because it's not as risky, accounting and reporting, not as risky.
Yeah, exactly. With accounting reporting, you've got 3 auditors. They're active. You have an audit committee that's active. Budgeting, Bridget and I have talked a little bit about, budgeting philosophy, if you will. I've talked to Don Murphy about it as well. I had been talking to Jackie about it. The controller's office, the state controller's office, has been critical of school districts that do not spend their budget.
Right.
Okay. The issue, frankly, is how much contingency is built into the budget. All right. To me, it's not a major issue, but the controller's office, when they write their reports, make it seem as though you're overtaxing.
Right.
Okay, and you may or may not be overtaxing. You can't tell if you're overtaxing or not from a budget variance. You can only tell from an operating surplus. If you have a big operating surplus regularly, then you may be overtaxing. Okay, but the question of how much contingency gets built into that budget that you're not taxing for, right? That contingency is covered by the appropriated fund balance, right, and reserves. Okay, so I'm not trying to say you're overtaxing at all, but it's possible that you might want to tighten up your budget, appropriate less reserves and fund balance, and get ahead of any potential criticism from the controller's office when they come back in. 6 months ago, they did a report on Mineola that caused some concerns in the local community, and the report is really misguided. They're my client. It's a $100 million school district. Their total fund balance is $15 million, and they have not had an operating surplus in 3 years. Okay, so theirs is simply a budget variance, and the answer is, who cares? It's not significant. It really is not a big deal. But when you read in the community and the language they use makes it seem as though something inappropriate is going on.
Okay.
And it's just something you have to be able to explain to your community.
Don, under information technology, sir, disaster recovery has been done since September of 13, which is going on close to almost 8 to 10 years.
Yeah.
Is that something, sir, that's something that we should also look at? That's under an M as moderate, I guess.
Yeah, because we haven't tested it in a while.
Yeah.
Each year with disaster recovery, we make inquiries about it.
Okay.
Right? An awful lot of your services are provided through BOCES.
Okay.
Which is a good thing because we know BOCES is doing the backups as appropriate. There's been no concerns from the IT folks. We ask if they've been able to restore, have they tested the recovery part of it for the significant applications, Envision.
Does that have anything to do, Don, with lately I know a couple of school districts have had to pay hackers money?
If you have the data in a very secure place that's not been encrypted, you may be able to restore from that data at some point. And BOCES is aware of that.
Okay.
Hopefully.
I think that when we did that's when Don Murphy had actually entered the district as the IT, wasn't he what was his original position, IT?
Well, Don was the IT guy.
The IT guy.
Don, he was a math guy and then he became the
Right.
IT guy. Yeah. So when I did the interviews over the summer, I met the new IT guy.
Okay.
Don sat in for pieces of that.
Okay.
Because we're going on over 8 years on that thing. That's a long time.
For us to look at, yeah.
Yeah.
Yeah, most of the work we do with this, on the IT side is application access.
Yeah.
You know, we don't get
Not
into
as
the nuts and
complex or
bolts.
risky, I can understand the
Right.
benefits themselves.
Yeah, we don't get into the nuts and bolts of that.
They look like they're muted. I don't know if they have any questions.
Are there any questions or comments?
No, I would just say that I agree with the, looking at benefits next.
Okay, good. All right, so the next steps then is this report should be received by the board. You then have 90 days to prepare corrective action plan. The controller's office has been critical of corrective action plans because of two things. One is you have to assign it to somebody. Title is okay, you don't need the name. And you need a time frame.
Date, right.
Okay, and that's gotta be in the corrective action plan or SED will reject it. We're gonna go with benefits. One change that's gonna come up in next year's, you may not notice it because it's pretty, it'll be pretty subtle. The way we structure our agreed upon procedure engagements is going to change because the accounting standards related to agreed upon procedures are such that I cannot make recommendations in an agreed upon procedure report. Okay, our industry has decided that that's not appropriate. That all they want in an agreed upon procedure report is for me to say what we did and what we found. I think it's important that I provide recommendations. I think that's part of the service. So we're gonna structure the agreements as consulting agreements. It'll be subtle, it'll look for all intents and purposes, it'll look the same, but there'll be some language changes to change the scope of the work. That actually came up, auditors have to be audited by another company every 3 years called peer review. That came up in our peer review, so we've got to fix it, so I'm gonna change our agreements structure a little bit. But it'll be the same basic work product.
Thank you. All right, so a motion to accept the internal audit for both agreed upon procedures and risk assessment update.
I'll second.
We need to vote on it, right?
Yeah.
Can we get a vote, guys, on accepting?
I vote to accept.
Aye.
Aye.
Thank you. Thank you,
Okay.
Don.
Thank you all.
Thank you, Don.
All right,
Thank you.
stay well.
Have a nice evening.
You too.
Thank you. All right, so item 2, external auditors, review of the audit for 2021.
Did you have the PowerPoint?
So it's gonna be up on the
Okay,
screen.
perfect.
Yes, of you.
Reminds me when you watch election results. When this district and that state.
Drum roll.
Thank you.
Sweet.
Do you want to do it?
Yeah, definitely.
Really good, so I'm like, all right. Let's be kind of like.
When you get the remote, your wife's like,
And I,
exactly, I don't get it at home.
That's right, that's why I like to do the PowerPoints. Oh. Okay, so we all set?
What's that?
All right, great. Well, thank you for inviting us to present the results of the audit, the external audit. So you do have the documents in front of you, the financial statement audit, the management letter, the extra classroom audit, and the governance letter. But what we did was we prepared a PowerPoint just to give you an overview of all the documents. And then if you have any specific questions on anything, you know, we can go into that. So Brendan, do you want to? Okay, so overall, for the financial statement audit, you received an unmodified opinion, which is the best opinion you could get as a school district. The district really does a great job with getting the books in order. Lisa, I'm sure you know, is been here for a long time, and she does a great job. Bridget, you started right when the audit began, right? We're right in the thrust of it. But you know, thank you for your cooperation, and tell Lisa, I mean, we saw her before, that she really did a great job getting us everything we needed to get the audit done timely. So in addition to issuing an opinion, we also give you recommendations on your internal controls. So you do not have any material, come on, Danny.
Take that
Sleeping at the wheel.
Put up in your words.
It's not working. There we go. So in addition to giving you an opinion, we also look at your internal controls. So we issue you what we call a management letter. There was nothing in here that we considered material weaknesses. However, we call them other matters. So we always like to give you recommendations. In the management letter, we also give you the status of the prior year. So you can see what was implemented last year, what the current year findings are. Anything that was not implemented, we carried forward in the current year. So Brendan is going to go into the management letter, so you all have a copy of it. So if you want to just go over the 2 areas that we had recommendations on, Brendan?
Yep, the management letter is one of the small documents. The first paragraph starts with in planning and performing our audit. So the first comment from this year was related to the school lunch fund. So I think this has been a common issue here over the last few years. We do say this is one of the quote-unquote good problems to have, obviously, having that excess money that you can come up with a plan and reinvest back into the food service program. But again, you are limited to 3 months average expenditures in your school lunch ending fund balance. So we did note that at the end of the year, the district exceeded that amount by about $657,000. So we do recommend that the district continue to monitor and come up with or modify any sort of plan that they currently have to try and draw down on that excess fund balance. Okay.
Any chance we get, I mean, this is literally something that has existed at least for 10 years now.
That's
Is
been a
it
while,
getting
yeah.
any better? I know we always say it doesn't matter, and
Right.
yet it's,
Well, John, this year was a little bit different because the district received a lot of federal money this year that they didn't get in the past because all the meals were free. So I looked at the comparison of last year versus this year, the federal aid went up 600,000 from last year. And the sales went down 400,000, so that was the 200,000 that they made. And the cost of goods sales only went up down 100,000, so that's why they had a big profit this year. So I think a lot of districts had that windfall because of the federal aid. But next year, you won't have that additional money. So, you know, they need to really reinvest in the program, but this year was an anomaly.
Yeah, I think they were previously, I wanna say a few years back, it was slowly coming down, and then I think it,
Right.
like Marion said, it jumped back up this year because of that big profit, so.
Right.
Okay.
So then the second area was related to extra class. These are all of your student accounts and clubs. So a couple different areas here. First being related to cash receipts. So we did note that there was just an overall, based on the receipts that we selected, there was an overall lack of supporting documentation just to fully substantiate the source of those funds. So this is things like either listings of payees for something like a field trip. We didn't see any profit and loss statements prepared for any fundraising activities. And it didn't appear that there was pre-numbered tickets being utilized for any type of like admission event, such as like a prom. So these would be controls that we would recommend because it allows us and gives us more comfort over basically substantiating the total amount of cash that is collected for an activity. If all we can see is, a deposit form with a total listed, we can take that to the next step and agree that to the bank account to see that that was deposited, but we don't have any way of verifying that that was the total that was actually collected from that event. So again, I think it's just a matter of, maybe speaking with the club advisors, making sure they're all aware that these are things that, you'll need to prepare for a fundraising activity for your cash receipts.
Mm-hmm.
And then definitely to make sure that they're forwarded to the business office. I think that in years past, I believe that was kind of the mishap was that, they said that these profit and loss statements were being done, but they weren't being forwarded to the central treasurer. So just making sure everyone's on the same page there.
And there's a lot of guidance out there. The state has samples of what they can be used. So reinforcing training, I guess, do you do training for extra class from
Yes.
the club? So, because that's really, the cash receipts is really where the exposure is.
Right.
And the cash out at the building level is where the exposure is.
Mhm.
So we really need to see, like if the prom, they have, prom tickets, compare that to the number of kids times the price. So we can tie it in, and this year we really wanted to hone in on that at all our school districts because that was the biggest activity for the year. And unfortunately, because you couldn't provide that information to us, we didn't give you an unmodified opinion on the extra classroom because we weren't able to get that comfort. So hopefully next year they'll be able to provide that. That's what we're looking for.
Okay, so that was on the cash receipt side. And then on the disbursement side or check side, we also did a sample there and test for certain controls, approvals. So we did note that on the majority of the vouchers that we did test, the invoices weren't identified as being paid. So typically it would be a stamp or some sort of perforation in the invoice just to prevent the potential for a duplicate payment being made on those invoices. That was it for, actually no. And then I guess for 1 out of the 15 vouchers selected, there was also they weren't able to provide an invoice to support that purchase. So that was it for the disbursements. And then lastly, for extra classroom, this again I think has been going on for a few years now, but it doesn't appear that the central treasurer or anyone is in charge of monitoring 1099 compliance for extra class, which again you wouldn't think would be too many vendors that would be issued, but just coming up with some sort of a procedure to review, payments made to date in any given calendar year, and making sure that any, individuals or LLCs that were paid excess of the $600 amount should be issued a 1099.
Is the central treasurer a position that's paid at the school?
I believe so.
So that person's,
Yeah, receive the stipend, yeah.
so we have to figure out why, right? It's not like it's a volunteer, it's not like a student then.
No, they get a stipend.
N99 compliance, I know, I'm not sure we're graded at my company either.
Don't say it.
John, you're alive, I just want you to know.
So I do wanna point out, we did have some conversations with the treasurer, and, she was asking about, how would she go about doing this, so it sounded like she did wanna make an effort to start incorporating this
Yes.
into her.
So, and what about status quo? It's pretty much the same.
Status of prior year was,
comments,
yep, pretty much the same two comments, so.
right? Okay. All right, so any other questions on the management, or we can move on to the financial piece of it? Anna, you ready?
Oh,
Oh, go to the general fund.
sorry, I think it's working again.
My fault.
That's all right.
Okay. So what we did was we prepared a summary of your fund balance last year versus this year, so you could see how you did overall by the different funds. So we did the general fund first. This is what your budget is based on. So this year you did have an increase overall of a little more than 4.8 million in the general fund. And it really is broken out by restricted funds, assigned fund, and unassigned funds. So your restricted funds are all your reserves. So those are really specific and earmarked for those specific expenses. You can't use that for operations. So the first group of reserves really just had an allocation of interest. So there was really a small increase of attributable to interest. The restricted for retirement contributions, that did increase this year about $3.4 million. That is just for the ERS system. So right now you have about annual expenses of 1.5 million in ERS, so you do have a very ample amount of money in that reserve. You have about 6.5 years worth of expenses in that reserve. So the district does appropriate the reserve this year. They use that reserve for current year payments, but they also funded the reserve and they allocated interest. So that was the increase of the 3.4 million. There's no legal limit on what you can include in that, but for TRS, there is a legal limit on what you can put in that reserve. So you're limited to 2% of the prior year TRS salaries to go into that reserve. And the maximum is 10% of the, for the total amount that you can have at one time of the prior year salaries. So this year you were able to put monies into that reserve, and that really is the bigger expense out of the two that you have in your budget. So with the TRS, it was just a funding and an allocation of interest. Then you have your employee benefit accrued liability reserve. So that is for your compensated absences. So if an employee leaves, they are entitled to either vacation or sick pay per their employment contract. Right now, the district does have a long-term liability of $20 million on the financials. So you're about 42% funded in that reserve. This year, you were able to fund the reserve. You also used the reserve for current year payouts, and then there was an allocation of interest. And then restricted for capital is the most restrictive of all the reserves, and that requires voter approval to establish and voter approval to spend. So this year, you did appropriate the capital reserve for current year expenses, and that was voter approved, and then you funded the capital reserve and allocated interest. The assigned category is really just open purchase orders for general support and instruction, and that's just an accounting reserve. Then you have designated for subsequent years expenses, so you appropriated less this year for the following year's revenue budget. So for 21-22 budget, on the revenue side, you have 3.6 million. The previous year was 4.2 million, so that was the decrease of the 645,000. You maintained the 4%, which you're allowed to have of unassigned last year as well as this year, and that's really your savings account for any unanticipated expenses or revenue state aid shortfalls. That's the level you want to be at. That's what the financial advisors look at. The controller's office also looks at that when they do their fiscal stress monitoring to make sure that you are at that level. So you do have a nice long-term plan here. You're at the 4%, which is for current year needs, and then you're funding the reserves to be prepared for the future for any increases in any of these types of expenses. So overall, it was a good year, we increased 4.8 million from last year.
Can I just ask a question?
Sure.
I don't know if I heard properly. For TRS, are we now overfunded?
No, you're not overfunded.
Okay.
You're good.
I think though, Colleen, I agree with you. What you're saying though is we don't need to get that. It's not that we're overfunded. We're putting more in there than we need to.
Oh, you're talking about
Well,
the ERS.
ERS.
Yeah, can you, I'm sorry, I don't have it.
Yeah, so the
In
employee
front of me.
retirement system, there's
Back.
no legal limit on what you can put in there. Currently, you have 6.5 years worth of expenses
What does a
there.
usual school district have?
That's high, so I would say, usually I say between 3, maybe,
So we're double
maybe
probably.
5.
Yeah, 3
you
to
know,
5,
so-
5 being the high
Out
side.
of all these reserves, I would say you wanna use that, you can use that in your budgeting, on the revenue
Yeah.
side of your budget, yes, that.
I'm sorry, is it possible just to flip back just one page just to show those reserves again?
Sure.
I just wanna make sure. So then with ERS, if I had heard correctly, ERS, there's no limit, but with TRS, was there a limit of 10% of the prior year's expenditure?
You can
10%
only
maximum.
fund 2% of the prior year's TRS salaries every year. And
Oh, salaries, okay, that's
Right.
that's what I was missing, okay.
Okay, I know it's hard to hear through my mask.
No, that's okay, because it
Great.
didn't make sense if it was the expenditure, but it's of the salaries. Okay, that's
Okay.
fine, I'm okay now,
Okay,
and
all right,
okay.
great.
thank you.
You're welcome. Okay, then the next slide, that's the general fund, school lunch fund. So we were talking about this a little bit earlier, so you were over the level that you're allowed to have in the school lunch program. You're limited to 3 months of expenses. So, and John had asked before whether this was, why is this a problem every year? But this year, like I said earlier, you did receive over 600,000 more in federal funding this year in the school lunch program. And then sales went down 400,000 because the kids, all the meals were being funded by the federal government this year due to COVID. And the cost of goods sold went down 100,000, so there's the increase from last year to this year. So what's gonna happen is the district is gonna have to come up with a corrective action plan to submit to child nutrition on how they're going to improve the school lunch program to bring that balance in line with where it should be. So whether it's a point of sale system, whether it's equipment or whatever, that you need, that's what you would spend the monies on to bring it down to that level. Okay? Miscellaneous special revenue fund, this is new this year, so we implemented a new GASB 84, so the financials are a little bit different this year. What we had to do is look at everything in the trust and agency account to see if there was anything that the district had administrative control on. So these are fiduciary accounts. If the district did have administrative control, then it would be reported in a governmental fund. So now you're seeing miscellaneous special revenue fund. This is a governmental fund, and what's in here now is your restricted for scholarships and donations. So previously that was in what we call a fiduciary account. So now it is, because the district does accept the scholarships, the schools determine who gets the scholarships, so there is administrative control. And then the other one was extra classroom, because you do have faculty advisors involved, you have a board policy. So all this criteria basically said these are not fiduciary based on this new guidance, and now it's considered governmental, and it's now in what we call a miscellaneous special revenue fund. So that was new this year, so you'll see on the financials, we restated the opening balance because it was a new accounting standard, and there's a new column reflecting this in the main governmental financials. You do have also custodial funds if you have collections of libraries, so that's the other, right? So they have that, where some districts, if you collect money for other governments, that's considered a fiduciary account. So we do have a new financial here for custodial, which is the collection of property taxes for your public library, and also pilot collected for other governments, which is the for the public library, and then it gets dispersed out. So the school district is just an intermediary. So that's the reason why that's considered fiduciary in nature, where the other activities, there was more administrative control, so that's why it's in the governmental fund. So that's new this year. Capital Projects Fund, we break it up by restricted for capital projects, which is projects funded by the capital reserve, and then assigned projects, which is projects funded by your budget through an inter-fund transfer. And then the debt service fund, this is where it's restricted for debt service payments. So there was a slight decrease from the prior year due to the amount of the transfer compared to the debt service payments, and interest income also goes through that fund. Okay, so the next slide is just really an overview of what we just spoke about. So this year, your fund balance did go up $4,876,485, and that really had to do with revenues exceeding expenditures. So on the revenue side, the increases were in real property taxes and pilot money. That was offset by decreases in STAR, use of money and property, which was your interest income primarily, state sources, and inter-fund transfers. And then expenditures and other financing uses decreased $736,596 or 0.66% from the prior year. And the real big reason why that decreased was in the prior year, you had a $3.5 million inter-fund transfer for the capital reserve, appropriating the capital reserve. And this year was only $675,000. So that was really the big swing on why the expenses went down, because it includes that other financing uses in that calculation. Then we talked about ERS, so that's where we were talking about where you have the 6.5 years worth of expenses in there. So this year you did increase the funding this year of $3.6 million. And then we allocated interest of $2,906, and then you used that reserve for current year payouts of $250,000. TRS, like I said, was just a funding, so it was $941,000 and an allocation of interest. The increase in the employee benefit accrued liability was really just funding of $1 million. You did use that reserve for current year payouts, and then there was an allocation of interest of $4,351. Capital reserve was due to funding of your capital 2 reserve, because you have the 1 and the 2, in the amount of $1.5 million, and that's where voter approval to establish. And then it was offset by utilizing that reserve, $675,000, and that money went over to the capital fund. That's $675,000. The remaining reserves, they increased due to.
My
You
thing's,
got it.
my
You're
thing's
so
stopped
quick. Okay. Are you doing it? Okay.
He's
So I'm
helping me
like, why is that random? Okay, it's magic. So the remaining reserves was just an allocation of interest. You were at the 4%, which is where you want to be. We talked about school lunch. You know, you did have a operating profit this year of $118,000. Special revenue, the decrease was just really due to the activity of the extra classroom funds and the scholarships. Capital fund decreased $58,000, and that had to do with the outlay exceeding state sources. You did get some state money this year, and then you had an inter-fund transfer from general fund. That was the appropriation of the capital reserve that went over to from general fund to capital. Debt service was really just the difference between the payments and what was transferred from the general fund. The next slide talks about unassigned and how you started at 4%, you ended at 4%, so how did that happen? So on the revenue side, you were over budget $4.6 million, and that was primarily due to pilot, what is this? I'm trying to read my handwriting. Compensation for loss, miscellaneous. That's pretty much the areas that we had overages on the revenue side, and then on the expenditure side, it was central services, instruction, pupil transportation, employee benefits. Then you funded the reserve, so that comes out of your unassigned, and the ERS, TRS, and the EVLR, and the capital reserve 2. Was the $7.1 million that comes out of the unassigned, and then you had unused appropriated reserves. So you, in your budget, you do appropriate for the employee retirement system and the Evalor reserve. However, you only used 821,000 and you, in your budget was 900,000. So the difference was 12,000, which went back, or 78,000, which went back into the unassigned. Then we allocated interest of 12,775. Then whatever you appropriated for the next year's budget comes out of the unassigned, and that's how you ended up at the 4% this year. Okay? And then in the financial, we talk about the overall financial health of the district. So in the management discussion and analysis, which is like the first 16 pages, that kind of really does an overview of the financials, and we talk about the continued leadership of the district's board and administration, Board of Ed and administrative oversight of the finances, use of BOCES, the services of BOCES. And why do you want to have a strong financial health? It assists with your tax cap and compliance with the tax cap. It improves cash flow, reduces borrowing and interest costs. It improves your credit rating, or at least maintains your rating. It funds unbudgeted contingent expenses and also state aid shortfalls. If that happens, it was looming last year. So, and then it preserves existing programs and opportunities for the students. So really, it's really important to have a strong financial health. And I feel the district does have a strong financial plan by having reserves and being at the 4%, which will help you in all of these capacities. Okay, so that's the financial statement audit. So we also did the extra classroom audit, which we're going to touch on a little bit, and then the governance letter. And then if you have any questions, we can go over.
I'm gonna have to go, but
I
do I have to ask a
know.
question?
I
And John,
John always has
before
to
you
post
go,
it.
is there anything we have to vote on
So we
before
would have
John?
to
Oh,
vote
yes,
on
okay.
accepting
Because John
this.
is your fourth, so I just want to make sure the
Right.
numbers.
Yeah, no, I know that, and I will
Okay.
stick around for a vote, and I'll
Okay.
ask one question.
Okay.
Yeah, I'll keep it to one. You
Which
mentioned
page?
very quickly about pupil transportation,
Yes.
and if anyone has the financial in front of them, on page 8, it lists that pupil transportation costs went up 35%, from 5.2 million in 2020 to 7.1. That's obviously a dramatic change the way I've seen it. I don't know whether you or Bridget happens to know what happened over the course of the year.
Well, during COVID, you didn't have the transportation.
Right.
COVID, and I feel like the
Right.
answer to every question is gonna be something.
Yeah.
you're right.
It is, and then
Right,
the
right.
contract is an increase of either CPI or 2% or somewhere around
Okay.
that every year.
COVID's the answer, that's I should have.
Also
Yeah.
nice.
So basically, they didn't have to pay their
Right.
transportation companies for a quarter of the year last year.
Right.
Right, exactly.
And the only other thing that confused me, I will ask a second question, on page 6,
Mhm.
and I think you mentioned it in the notes, on page. Yeah, so on page 7, you mentioned in the second paragraph that the TRS decreased by 7,228,000.
Mhm.
And you see on page 6, not only did it decrease by 7,228,000, it went from 7,228,000 to 0.
Right.
And are you saying that's just because it gets covered, or that's?
So what happened
Yeah,
was,
right.
this is a number that comes from the state, so they have an actuarial assessment done
Right.
at the state level, and then Hopel gets its proportionate share that you have to
Mhm.
report on your financials. Last year, the TRS system was overfunded.
Mhm.
Okay, so it created an asset on your, this is on your long-term
Right,
balance sheet,
right.
okay, not on this has nothing to do with your budget.
Right.
And then this year, the TRS was not fully funded. It was probably closer to 97%?
Yeah.
So it created now a liability
Gotcha.
because of the way it fell with
Okay.
the funding. And there's a whole chart in the back, John, if you want to just you can look at it in your, in your leisure, but it kind of gives you, it gives you the
It's like 4 pages of
statistics.
notes.
I
You know.
knew it existed in here somewhere, I just
Right.
didn't read it and tried to find it. Okay. That's all my question.
Okay. Yeah, a lot of those numbers come from outside actuaries, all these evaluations.
And I think that big swing probably had a lot to do with, the financial markets during COVID and
Makes
everything,
sense.
when the actuaries had to update their inputs.
Yeah, so we'll just say, so it's 97% funded this year, and last year was 102% funded, so that's why it went from an asset to a liability. And that's on page 64, in case you want to read it.
Thank
So do we have time to quickly go through the other two, or?
I have to vote on this now, I do have to go.
Okay, yeah, you want to vote on everything, and then we could just.
Sure. Okay, so, Colleen or Tricia, do you have questions before we move to vote?
Sorry, I didn't realize I was on mute. No, I just haven't seen everything.
No question.
Okay. So a motion to accept the 2021 external audit?
So moved.
I second.
And how do you vote, I guess,
Aye.
collectively?
Yes.
Aye, yes.
Yes.
I heard one
I
yes.
think we're waiting on Tricia.
Yeah, I think you're right.
She's muted? Tricia there?
I think she's muted.
I think she has unmuted
Hear
herself.
me?
Yes, we can hear you now, Tricia.
I'm here. Can you hear me?
Yes, ma'am.
Okay, I said yes.
Thank
Sorry,
you.
my-
Thank you.
Okay.
Thank you.
I'm sorry to.
That's all right.
hold
No
on.
problem.
Okay, not a problem, good seeing you.
You too. I'm gonna leave this because I haven't touched it and I don't know if you're I have my own copies, I'm good.
Mary, not to be.
Bye, everybody.
I have a lease
Good seeing
signed.
you.
How long will this presentation take? 'Cause I
Like 5 minutes.
good, that's good. Otherwise, people will be out of the home, so I gotta make sure they have a home.
See you soon. All right.
So the other audit we did was the extra classroom audit. That's the smaller document that really just has all the activity of the clubs. And there was a lot less activity this year with the extra classroom this year, because I looked at the activity last year. The total receipts and disbursements were 463,000 last year, and this year it was 171,000. So it was about 25, down 75% of the activity. And really the biggest activity this year was the class of 2021. They have the proms and whatever graduating type of activity they have. But as we talked about earlier, we really need to get a handle on the receipts at the building level. And because this was not an unmodified opinion, which, last year you didn't get a unmodified opinion either. And so that's kind of really what we're striving for. We're hoping for next year we'll be able to get that. But anything that came out of this audit was in the management letter that Brendan went over. So, there was no material weaknesses, but there was some recommendations that he did go over. So this was the second audit that we did. Does anybody have any questions on the extra classroom clubs or anything? Okay. And then the last document Brendan's gonna go over is the governance letter.
Yep, so the governance letter is the second of the two communication letters that we do issue each year. We are required from our professional standards to issue this letter. And basically what it does, it talks about some of the significant accounting practices and estimates that go into preparing the financial statements. So as Marianne went into detail on before, in that first paragraph, you'll see the new accounting standard that was adopted, GASB 84. And then it goes into some of the significant estimates. So this would be for things like your capital assets and their determined useful lives, your compensated absences liability, and then those other three big liabilities related to those outside actuaries. So your OPEB, other post-employment benefits, your workers' comp, and then your net pension liabilities for ERS and TRS. So all of those, there is an element of an estimate that goes into those. They are prepared by an outside actuary. And there are some significant inputs that they estimate and come up with to put together their report. So we do want to point that out here. Then the governance letter goes into any difficulties or disagreements that we may have had with management. Happy to report there were none of the such. And then it talks about any corrected or uncorrected misstatements that we might have come across during the audit. So we are happy to note that we didn't come across any misstatements. So again, the books were in great shape.
Which is very rare.
Definitely very rare to
There's
see.
not one audit adjustment, so the books are really in great shape. So you guys did a great job.
And that's really it for the governance letter at a high level. So any questions on that communication? that's all we have, right?
Awesome.
We
Thank you so
thank
much.
you both and thank you for coming out.
Thank you for having us.
Thank you.
Can you guys leave a copy of the reports for me? I'll pick them up at the next board meeting.
Sure, I have a copy for you.
Yeah.
I'll give you it.
Excellent.
Yeah.
Thanks, Bridget.
All right, so if there's no further discussion, we will set another meeting. This way everybody can be here and we can sort of plan out the year together. If no further discussion, I will adjourn the meeting.
Thanks. That's all right.
Yep.
Thank you.
Okay, bye.
Hey,
Thank
Colleen,
Good night.
Take care, everyone.
you want me to put it in your mailbox?
Oh,
Yeah, do you want me to put it in the mailbox? I'm heading that way anyway, I have to go to the office.